Well, let's move from livestock to grain markets now. On Wednesday, the U.S. Department of Agriculture came out with their latest World Agricultural Supply and Demand Estimates report. We had the chance to sit down with Doug Simon from Tredas just after that report was released and began by getting some of his reactions to those numbers. We had a WASDE today. Any big surprises from that report?
Well, it was this morning at 11, so we're real timely on this report this afternoon, but they didn't really have any big changes. The U.S. Ethanol crush was down 15 million or 25 million bushels, and the soybean crush was down 25 million bushels. So both of those dropped. Everybody was thinking that they were going to cut exports on the corn side, but they didn't cut that. Soybean exports have been really good, so there wasn't really any room to kind of cut those. In fact, they've been so good, they're actually probably should have actually increased them a little bit. But with that cut in the crush on the soybean side, we basically have a smaller crop. So by cutting that crush, it does allow for them maybe to increase those exports maybe again at some point here. But the big changes are really on South America on that side of it.
Let's talk more about South America. That's something we're all keeping a close eye on as kind of we're here through that season. What's the latest down there in terms of weather?
Well, that's a good question. So last year, looking out, we were always 3 months out. It was dry in Brazil, 1, 2, 3 month forecast. This year, they've had more rain come into Brazil. It's still a little bit variable. There's some areas that are dry, especially in the south, but even the main producing in the central part of Brazil, it's been a little bit variable, but they had more rain lately in the last 30 days. So they're a little more sandier soils or lighter soils. So they tend to lose moisture, but having more recent rains has helped kind of a maturing bean crop. Down in Argentina though, they're been very, very dry. So the numbers that came out today, USDA was at 45 million metric tons. They came in today at 41. And so they dropped that by, it was about 4.5 million metric ton drop. Some of the, like our RJO affiliate that we deal with, they kind of think it's maybe closer to 40, and the Rosario exchange down there was even lower than that, down 35 million metric tons. So they're much lower down there on that number, but so that's going to drop quite a bit out of the Argentine production, which they're a big crusher of soybeans, and so that's really kept soy meal prices very strong in the U.S. Crush rates are really strong right now, the margins, and that's why we've been, crushing a lot of beans here, and demand's been pretty good for the soybeans in the U.S. side. The other things going on, when you look at Brazil corn, they left that the same. Our RJO affiliate in Brazil says they could increase corn and bean production down there a little bit. But when you look overall at Brazil, Argentina, all of South America, bean production is supposed to go up by about 24 million metric tons, which is about 1 billion bushels. So we export, our carryover is supposed to be about 220 million bushels this next year. So that's a big increase out of Brazil, mainly on the bean side of it. And on the corn side of it, they're actually slated to be a net exporter of corn of about 50 million metric tons, which is about 1 million more than the U.S. So in the first time, Brazil is going to be the largest exporter of corn in the world. And Argentina, they actually increased their exports from 20 million metric tons. They added 2 million to that. And so, they're, pretty sizable when you look at relative to the U.S. and Brazil.
What do all these numbers mean for the prices we're seeing here domestically, both old crop and new crop? What are you seeing there?
Yeah, it's been pretty range bound lately on corn, especially. Beans took a hit here 2 weeks ago when they kind of looking at a little more rain coming into Argentina. They've rebounded a little bit. When you look at corn today, we finished at $5.94, which was the same price we had for the February average last year for crop insurance, which has just started here on February 1st now for this year. And then beans were about 60 cents higher than today. They were $13.70 right now. So the bean price last year was about 60 cents higher, but we're going to start averaging that. So we've been, down into the 1330s, and we'd spent quite a bit of time around $14 on no 23 beans recently. But when you put everything together for next year and you look at acres, stuff that was prevent plant last year coming back into play, we're going to see another 3 million acres of corn come in, and you're going to see a modest increase in beans. But when you look at those final numbers and you have a reasonable yield, you're looking at going from a 1.2 billion bushel carryout today toward 2.2 billion. So that's a pretty substantial increase in corn carryover. And then you also look at the bean side of it. We're supposed to grow from maybe a 225 million bushel carryover this year on soybeans and go toward maybe 450 to 500, depending on how things turn out with that Argentine crop. But we've got a lot more export competition from Brazil. So I don't want to be complacent about risk management this year. Last year, you didn't see where we could grow the carryouts that much, and you didn't have as deep a price level or deep a price ranges. So I think we have to be more aware of that, what a 2 billion bushel carryover would mean for corn prices. So we want to be active selling D's 23 corn or buying. You can do some put strategies, buy a put, you can do some things underneath there to get a floor underneath it until we get out a few more months if you want to do that. Especially like that on beans because they tend to be a lot more volatile. But I think you really have to pay attention to what your break-evens are. Break-evens on corn are probably somewhere $180 an acre. Beans are more 120. There's a slight favor for corn. Whether that's going to shift our acres a whole lot or not, but there's returns out there despite what people's emotional response is. So we need to be looking at being able to lock some of that in.
Let me wrap up with this question to you. How's basis looking? We're starting to see it weaken a little bit.
It did weaken. Columbus right now is about 35 over, and we were more toward 80, 85 over back before Christmas. The Kansas market, the feedlot market down there where we've got a lot of cattle and had dry conditions and loss of feed and forages was probably $1 weaker now from where it was. There was a panic back in September, October, November to make sure that they could shift corn down into those feedlots. Now what's happening with diesel prices being so high, freight for trucks is high, we're starting to see rail corn ship into those markets now from probably Iowa, maybe a little bit in the Dakotas. But we're also seeing some rail corn hit ADM Columbus. There's trains in there as well. So we're in a high basis market here. It's weaker in the Iowa market where they had more corn in the east, and that corn's flowing by rail now, where it wasn't doing that back at harvest time. It'll be interesting to see when we get out to April, May, June, July. Those rail numbers for June and July are off probably about 20 cents from the high, so they're not off as much. So I think there'll still be some pretty good basis levels when we get out April, May, June, July. But I don't know if we're going to get back to the levels that we saw back off the combine, essentially.
Always a lot to cover, never enough time.
That's correct.
Doug, thanks for coming in.
Thank you for having me.